Hello, No Borders NBDR followers. Joseph Snyder here, coming to you for another exciting installment of our bi-weekly shareholder update videos. As you guys know, I have consistently done these for the last year and a half. No matter where I am in the world, no matter what I'm doing, we take a cycle with the team. We sit down and we go through the things that we're working on, the things that are going on inside of the organization, and we work to bring that to you guys in a very personalized and communicative and open format. And we're committed to continuing that motion through thick and through thin over the long term. This is a long-term play for us. This is a long-term investment for us. This, as I've said repeatedly, this is a wealth play for myself and for my family. And we are very committed to making sure that we're the most communicative and transparent and hardest working company in the OTC. You know, there's a lot of work that goes in not only to what we do every day in operations and things that we're building and the deals that we're trying to make and are making and the products that we're deploying. There's a lot of work there, but there's also a whole cycle that happens with this. You know, there's a whole commitment that we've put together, that we've made to you guys, the interested parties out in the internet, our public shareholders with the OTC markets, and we're committed to that. We're going to continue doing this. We've done it, we've done it very well, and I don't know how many of this makes, but we've never missed one yet. Never missed one yet. We've even been early, I think, on a couple of them, so that's cool. This is kind of a special one for us because this is the one where I'm going to talk about this Reg A filing that we just did with the SEC that just got posted on Monday and is in the approval process, among a few other things that we're working on. But I think the most important thing that's being talked about this week, the most questions that I have from new interested parties and existing stakeholders and things, definitely falls around this Reg A filing that we just did. And so I want to talk about that. I want to break that down. I want to tell you guys about what that means, what it means to us as shareholders. I'm a large common stock shareholder in the company, as well as preferred stock as well. And so, these things impact me as well as you. And I'm getting a glare off of my glasses there. So I'm just gonna kick those off there. I hold a large amount of restricted common stock in NBDR, and I have my family has and friends have and invested in our common stock right alongside a lot of the people that are out there in the market. And I want to clarify here. The folks that are invested in us, that support us on social media, that engage with us, that buy and trade our stock on the market itself, those folks are incredibly important to our business. We appreciate you, and we appreciate the social media sharing that you do, the engagement that we have with you, and everything else. But I have to be really, really forthright. The shares that are currently on OTC markets that are unrestricted, they didn't provide any capital to the company that we are today. They provided capital to a company a decade ago, and the people that ran that company used those funds to do whatever they were doing at the time, and that is now past. We acquired No Borders in March of 2018. The stock price at the time was $0.001.5, and there was no assets really in the business. There was no money in the business. It's not like we walked in and said, hey, this thing has all these great assets and we want to grow that particular thing. The business was a marketing and an e-commerce business, and we've continued operations in those areas. So there were synergies there that made sense for us, and existing synergies for us, operational synergies that made sense for us. But we didn't get a bunch of money for coming in. We didn't get a bunch of assets. We didn't get a bunch of capital for coming into that deal. We had to come into that deal with capital. We came into that deal acquiring the controlling interest in the company. We came into that deal acquiring the toxic debt that was on the company at the time. And so let's make a list really quick, right? We acquired the company. We acquired the toxic debt or settled it out at extremely reasonable terms, 100-to-1 difference of what it could have converted to. That debt note, the one that we couldn't acquire, the only one that we couldn't acquire, the convertible toxic debt note that was on the company at the beginning, at our beginning, March 2018, converted out to 5 million shares. It could have converted to 500 million based on the contract. We negotiated that deal out. We did that service to all of the shareholders of the company of not diluting it by an additional 500 million shares for a note that was already long gone and spent and done. And along with that, we have the capital that was put into the company, the additional capital that was raised inside the business via restricted securities and fixed rate convertible debt, where we know what the cost of the capital is, we know how long it is, we know how much exactly it converts to, as opposed to these toxic discount to market notes that just, no matter what happens, those people are going to get their money out of you, even if they got to hammer this thing down and destroy all of the shareholder value. Those are the things that we have done, and those are the things that we did back at the beginning, along with reducing the authorized share amount from 1.88 billion shares to 750 million total authorized. By reducing the conversion amounts that the preferred stock that we own, that we used cash to purchase, converts to. When we acquired the controlling interest of No Borders, we acquired it at a conversion rate on the preferred block at 100-to-1. That's 10 million shares at 100-to-1. It's 1 billion shares. That was the right that we had the day that we closed escrow. And we voluntarily went and changed that from 100-to-1 to 20-to-1. Now, why would I remove 800 million shares from my own pocket? Well, I do that because we're not actually investable that way. I can't have a legitimate conversation with the market that way and say, you should invest your money with us so that we can put your capital to work and grow it. Oh, and by the way, at any time I want, I can pretty much like dump an extra 1 billion shares on your head. That's not investable. I know that. I wouldn't invest in that, so I'm not going to ask somebody else to. We reduced the authorized shares. We reduced the conversion amounts for the preferred share block. We purchased and canceled and converted the existing convertible notes that were against the company. We have built, acquired, and launched multiple businesses inside the company since then. We have tractionable, actionable 6+ figure revenues growing in real time. We are operating around the country in multiple verticals through multiple different sales types and channels, all at the same time, while doing all of the things that we're doing with the public company structure and the communication cycles, and also the Reg A, right? I can't really describe to you how many cycles, how much time it took for myself and Chris and Cynthia and Andrew and Brian and all of the people that are involved in making that Reg A reality, how much effort that took during the rest of this process. Now, this isn't a video where I'm gonna, and I don't make many rant videos. Y'all got a couple. This isn't a video where I'm gonna come on here and rant about, hey, these are the things that we've done, and why don't I feel like the market's recognizing everything else like that. The fact of the matter is I'm laying out facts of the things that we've done to substantially impact shareholder value. I don't in any way want to denigrate or put down the value of you investors who are purchasing our stock directly on E-Trade or directly on the OTC market and the value that you have to our company, that engagement that you have with us, that belief that you have in us, that liquidity on the market that is provided through that cycle. Greatly appreciate all of that. But I want to be really, really forthright. The money from those shares being sold and being liquid on the market never came to us. We never got to use that capital to grow things and make things. We brought capital into this business. We reduced the shareholder overheads in this business when we got it. We reduced got rid of the toxic debt in this business when we got it. We put capital in. Our friends and the people that believe in us and our operating team wrote very large 6+ figure checks on repeated occasions to support the missions and the goals that we have, so that we could get to the stage with the businesses and the company to where we could go to the market and say, we're ready to access capital from the market to grow our businesses and to impact and to scale. Because the fact of the matter is we're not coming and saying, we would really like money so that we can go on vacation. We're saying we need access to capital. We need access to affordable, long-term capital that is with limited dilution. And I'm sorry, I have notes here, and there's specific words, and SEC attorneys and all that stuff. So I apologize for pauses there. I do like to just flow, but there's some words that are real specific, and our lawyers are like, yeah, you got to say this, the right way. So bear with me, guys. NBDR intends to secure low-cost, long-term funding while limiting dilution of our common stock, right? We need access to capital to grow the things that we're doing. We're growing organically, right? But the fact of the matter is that the only reason anyone like me would ever put up with all of the shit of dealing with a public company is so that we can have access to capital to scale things, and that we can have access to capital to acquire things. That's why I do all of this other shit. So let's run down what we filed and what it says and how we intend to use it so that we're all on the same page. This is not going to be an operations video. I'm not going to talk about how amazing Metadent's doing, or the 2,500 new SKUs, or the 2 new product lines, or all of this stuff. I'm not going to talk about all of that. I'm not going to talk about how amazing the Naturals line is, or some of the new beauty products that are about to come out, or the fact that we finally got cat trays that my cats will eat. I'm super stoked about that. Or how our sales are growing, or how the events are going. And by the way, I don't follow a lot of the forums. I don't do it. It's not me. There are some people on my team who do that. They kind of keep a pulse on things and what's going on and what's being said. So let me say this to the forum people really quick as a side note, just so that we can all get on the same page here. With the events, the fact of the matter is that we have a great way of reaching consumers with a superior product line. And we did a full round, and I mean in depth. I'm talking, we worked really, really hard for 20 hours a day for months to get to all of these places and deploy all of these tests and say, where does the product fit in the market? That's not just about going out and sitting in a booth and having a pop-up tent. And to insinuate that it is just shows small-mindedness. Like, you don't see the picture, right? We have a problem, and the industry has a challenge. Let's not call it a problem. Let's call it a challenge. The industry has a challenge. The challenge is that currently you cannot use a lot of digital advertising systems to market CBD and to share CBD with the public. And those systems normally are the tools that we use to do data tests and to identify our target markets, and to identify our demographics, and to, right? Now, demographics and targeting data doesn't just tell you how to reach people and who to reach. It tells you what products to make. And it tells you what those products need to look like to speak to that audience. And it tells you what your marketing materials need to look like, and who they need to be geared towards, and what that engagement needs to be like, and how that communication needs to flow. Different demographics purchase for different psychological reasons. And different demographics want different things in a product line. So we needed to find out what the demographic fit was for the No Borders Naturals brand. for this line of products that we love and believe in and want to share with you. They're amazing. I love these products. And I share these products with hundreds, and our team share these products with thousands of people around the country every single month. Show me another CBD company that's doing that. Show me another OTC company that is doing that type of engagement while running a whole other business and doing all of the OTC work on time. Show me any other OTC CEO or NASDAQ CEO for that matter, who's doing this every 2 weeks and talking to you guys directly off script, saying, y'all have access to me, at me on Twitter, not the guy I blocked, sorry, but she deserved it and I'm not unblocking you. You know who you are. I'm sure he'll be on one of the forums yelling about it in a week from now. I don't care. Keyboard cowboys don't scare me. I can promise you that. But I'm not going to talk about those things today. I'm not going to tell you how great the businesses are doing and how proud I am of our teams and all that other stuff. We're going to talk about this Reg A filing, and we're going to go through why we're doing this and what it's doing and everything else. And the rest of that stuff I'm going to leave for a couple of weeks from now, and we're going to come back to it. And over the next couple of weeks, we have some really fun announcements coming out around things that we've been working on. You know, some of the people who love me, let's say, right? Fitness Mama and BMO and Andrew, you know, some of these, Steve, you know, some of these people who engage with us in a really positive way all the time, they say, you know, Joe, you know, one of the things that we like about your video is your, you know, is your ego. Like, you know, we got it. It's happening. I don't think that it's ego. You know, I work really hard to make sure that it's not ego. Operating from ego has never gotten me the positive results that I want in my life. And it doesn't usually engender positivity in the universe. And so I want to be really clear here. This is not ego that you're sensing. I know what we're doing. You know, there was a moment in time when Mark Zuckerberg was in a deposition with the Winklevoss twins. The Winklevosses were suing Mark Zuckerberg, essentially saying that they made up Facebook, and he was saying, well, you guys are whatever, go away. And then he gave them money and they went away. But I think it was in the movie, right? And there's this scene where they're like, yeah, you're not even paying attention. And he was like, you don't even know what we're working on. You're fighting over something that happened so long ago and is so irrelevant. You don't even know the things that we're working on. We're working on things that are so far outside of what you know about right now. And a lot of times that's how I feel. And as a public company, that's a lot of the reality. There's stuff that we're doing. There's stuff that we've been working on this Reg A for months. It's 100 pages long. I read every single line a dozen times. But so it's not ego here, you guys. We have the results. We have grown our revenues consistently. We're wrapping up Q3 right now, and we're growing again. You know, real world business deployment and operations while tactically moving things forward with a focus on scale and a focus on impact and a focus on long-term shareholder value and stakeholder value. That's what we're doing. So if that's not the investment you want to make, if that doesn't make a sexy enough day in, day out trade for you, cool. Go buy somebody else's piece of shit. Is that fair? Does that sound fair? Because it sounds fair to me. And by the way, part of what this Reg A situation is all about is us making sure that there's an adequate number of liquid shares on the market for it to be an honest and consistent market for our stock and for our shareholders. Part of the problem that we have is we have such a limited amount of liquidity in our stock that it is potentially easily manipulated by shorts and assholes. And by the way, those are the same thing in my opinion. As a person who believes that there is enough in the universe for everyone, and as a person who believes that supporting positivity and pushing positivity out into the universe yields greater results of positivity, I don't like the idea of shorting being legal. I think that betting for failure in order to reap financial reward is a sum negative in the universe. And I think shorts can just burn in hell for it. So how about them apples? Now, let's dig in here, okay? Because I've told you a couple of times now that we're going to talk about this Reg A, and I haven't actually got there yet. So let's go ahead and dig in. On September 23rd, NBDR filed Form 1 with the SEC. Filing requests approval of $3 million public offering of shares at 0.1 cent, so at 1 cent a share, right? Now, let's break that down. So we got September 23rd, SEC filing, Form 1, $3 million offering, 1 penny a share. Okay, pretty simple. Now, we currently have roughly, I don't have the exact number with me right now, currently have roughly about 300 million shares total issued and outstanding. Okay, now, issued and outstanding, about 300 million, 310 million shares, something like that. This offering requests that the SEC approve us to sell an additional 300 million shares at an offering price of a penny a share. Okay, so that effectively doubles the amount of issued and out stock that the company has total. Now, a couple of things. First of all, that number is much less than our authorized cap. Remember, when we acquired Nomura, the authorized cap was 1.88 billion. Today, it's 750 million. So if you take 300 million out now, plus 300 million total, requested to be approved, that's 600 million. We're still $150 million under the authorized cap that you guys already knew about. That's been public record for a year and a half. So anybody that bought our stock in the last year and a half acquired our stock knowing that we had the immediate potential of issuing up to 750 million shares. Everybody knew that. That's not news. That's not even, and we're 150 million shares underneath it. We cannot entertain, again, I'm back to my legal notes. We cannot entertain any offers until our A1 is qualified by the SEC and the relevant states. So we've got a whole nother workload to do around with the states, right? There's a whole thing. We cannot talk to you guys in any form or fashion or accept any offers to purchase our stock in this offering till the SEC says that we can, and then the state where those individual investors would be says we can. So there's a huge amount of work that still has to be done. This is just the initial filing to say, hey, can we do this? And in order to say, hey, can we do this? We had to craft the most detailed business description, execution description, focus, marketing plan. Everything is in there. You got the whole thing. It's all documented. Every single piece of our strategy is in that document. And you can go read it. And you can decide if that strategy is something that you think is investable. And then if you decide that, there's nothing you can do about it because you got to wait till the SEC comes back and tells me I can do anything. And literally, we don't know when that could be. It could be tomorrow. It could be 6 months from now. I have no idea. It's totally out of my control. The only part I controlled was getting that thing done. We did that. We filed it. We're waiting to see what they say. We're waiting to see what we have to answer and what questions they have and all of this other part of the process. And then all the states, right? Florida and California is a great example. I mean, they go through their own state process just like the SEC does and determine what they think can have all kinds of ramifications down the road. So I'm told. Again, I haven't done this before. I haven't done a S1, a Reg A filing, sorry, wrong word, a Reg A filing with the SEC in a public company before. I've never done that before. I'm working on it. And it's a grand adventure, and I'm learning every day, and I love that. But that's what we're working on. And So that's been submitted. We chose a Reg A to raise capital for the company to avoid toxic convertible notes and to ensure the smallest dilution possible while strategically setting our company up to achieve the next stage of growth for our family of companies. We don't want to use the terrible funding structures that we get emailed about every single. Here's the frustrating part. If you guys, I mean, if you guys even understood, if shareholder value was of no consequence to me, I could get all the capital I want almost instantly. It's not. I get emails every single day offering me terrible, terrible money. We don't take it. We don't want it. I don't want to do that to myself as a stakeholder. I don't want to do it to the people that have invested with us in restricted stock since the beginning. Once we bought it, I don't want to do it to the people that are buying stock that was sold a decade ago on the open market. I don't want to do that to us. I don't want to make sure that when we're taking dilution, that we're impacting value. If we're going to issue stock to acquire a business, that business has to bring in value to justify the dilution that the existing equity base holds. That's just math. That's gotten lost a little bit in the world of business. Look at AT&T and DirecTV. DirecTV was a great company. AT&T bought it and fucked it all up. And now AT&T's going, oh, we want to spin this thing off because all the customers hate it and they all left. Well, yeah, you fucked it all up. Don't do that. And you overpaid when you started. And you know I'm a huge Elon Musk fan. I'm a huge Elon Musk fan. Tesla buying Solar City is a disaster for shareholder equity. I mean, you're just, right? If you're going to deploy equity and eat dilution as a stakeholder, the idea is to gain value. This structure is the best way for our company to get capital to deploy for growth and acquisitions and product development and all of these things with the least amount of dilution. The amount of money, the amount of dilution that would come from raising anywhere, anything from around these numbers or way below these numbers, even in toxic convertible debt, just destroys a business. I mean, it destroys a company. It destroys the shareholder value in that company. I don't want to do that. I don't want to impact our dilution for no reason. We want to use dilution. We want to use this structure for what it was built for acquiring capital to deploy aggressively and tactically in order to build overall value for the entire stakeholder base. That's the purpose. But the only reason we have a public company, the only reason we're interested in doing that is so that we can access capital when we see deals that need to get done, when we see deals that look amazing, and when we see impacts that we can make within our existing product lines that are scalable. That's the purpose of being public. Otherwise, I don't need to do all of this. Otherwise, all of this is a waste of time. If all of this is just emotion in order to keep some people who bought shares that were sold 10 years ago happy on Twitter every day, I don't need that shit in my life. That's not what I'm here to do. I'm here to build businesses. I'm here to build value. I'm here to impact that. And I'm here to build my legacy out of this and to build my family's wealth out of this. And we have to access capital to do that. Who knew? I don't know why anyone of you else thought of any reason why the hell I would want to deal with all of this stuff of being a public company CEO other than the ability to do acquisitions and to acquire capital and to deploy things and scale things. That's what I want to, that's what I'm doing. That's what we're doing. This is the best structure for that because the kinds of capital that we can go grab in the toxic convertible trash world of OTC finance, you guys don't want me to go take. And I sure as hell would have a really hard time outgrowing the cost of capital on that kind of money. So I don't want to take it. I want to take capital that we know how we're going to outgrow it. And I want to take capital that we know is the least dilutive and the least impactful to us, and the most impactful as far as the positive things that we can do with it. So in addition to that, we also plan to use these funds to complete our PCAOB audits with the aim of becoming a fully reporting company with the SEC again. Right? That's a piece of this. There's all of these pieces of this that are layered in. We want to move up the food chain with this business, with this stock. We want to finish the PCAOB audits. We want to go fully reporting with the SEC. The future uplisting opportunities, things like that. We want to look at those. But in order to do that, we need to be able to move forward tactically, move forward strategically, grow the things we're already doing, acquire the things that we see on the table that are really cool and worth picking up, and take these next steps for the company to get us moved up the ladder so that we can be audited, so we can be fully reporting compliant with the SEC, so we can potentially uplist and do these different things. You guys want that too. That brings in different tranches of investors. It brings in larger tranches of interest in the company. These are positive things for all of us together. So utilizing the funds to tactically move the company forward, not just with product, not just with brands, not just with acquisitions, but also with these regulatory things and these other pieces that do require chunks of capital and chunks of attention and time to get done so that we can move our company forward as a public company in itself and also its subsidiaries in the markets and the businesses that they're in. Okay. Now, we are not, as of this moment, going to market and getting some $3 million check and all of a sudden there's 300 million new shares on the market. That's not happening. That is not on the table. That's not happening. Okay. What is happening is that we are filing a request for approval to sell $3 million worth of stock, 300 million shares at a penny a share on an as-needed basis. NBDR intends to secure low-cost, long-term funding while limiting dilution of our company's stock. Right? So, NBDR will only accept the funds as needed and will adjust the offering price through amendments as share price and demand dictates. And again, I'm reading notes because this is like specific wording that I got to say a specific way, okay? But let me re-say that. And we're issuing this on an as-needed basis. That means that we're asking for this approval for this whole block and saying, look, this is what this is what we're ready to deploy. But what we're also looking at is only using that structure once it's approved. It's not approved yet. Once it's approved, using that structure on an as-needed basis and coming through that and only accepting the funds as needed and adjusting the offering price through amendments as the share price and demand dictates. That means that if we're crushing and things are going really well, and for the record, since we acquired No Borders, we started at 0015. We've gone as high as 14 cents. So obviously, if we're crushing and things are going well, and as things grow, if we're trading at 14 cents, we're not going to sell shares at a penny. Duh. I don't know. I mean, I don't mean to be rude, but come on. Obviously, we're not going to do that. We will file an amendment with the SEC and tell them, hey, this has moved a lot, and so we need to move this over here. Okay, great. By structuring this way, it gives us flexibility. If we see a deal on the table that's amazing or a great technology or something that's really cash flow positive, I mean, if there's something out there that we want to grab and it's $1 million, we can do that, right? But without that, we don't need to go grab $1 million tomorrow. We're not that company. You know we're not that company. We've done this entire journey so far on less than $1 million, I think, in actual cash, including the acquisition, right? Accepting funds on an as-needed basis. Adjusting the offering through amendments as share price and demand dictates. We're not just going to dump shares at a penny a piece if the stock's 4 times that, obviously. Okay? At the same time, we have to have something relevant to the recent market conditions to go to the SEC and say, look, we're trading around a penny or two. That's kind of where we've been. And so we want to register this offering, and we think that this is, reasonable from where we've been for us as a placeholder, as a key, as a peg. Okay? So let's break this down one more time, just so we're all on the same page. On September 23rd, we filed a Form 1 with the SEC requesting approval to offer $3 million public offering of shares at a penny apiece. Okay? We cannot entertain any offers until the A1 is qualified by the SEC and relevant states. And we chose to do the Reg A in order to avoid toxic capital things. We chose this structure because it is the least dilutive and it gives us the most control. We're not having to go out and grab 3 million and dump 300 million shares on the market and then, go deploy $3 million. We can take this as we need it and as we see deployment and tactical reasons to use it. So we limit the dilution, but we open the company's options. It's a no-cost upside for the business. Would you guys as shareholders want me to miss some amazing opportunity that was $1 million or $1.5 million because we didn't have this done? Would we hate to walk away from an acquisition that we could 10x in a year or two and have incredible things for all of our shareholders because we didn't have access to the capital? That would suck. And by the way, I have attempted on multiple occasions since the start of this business and succeeded around some products and some things a few times. Metadent's a good example. But I have attempted multiple times throughout this journey to acquire things that I thought were valuable, would be accretive and valuable to us with restricted common stock. And I have not been able to get many of those deals done. That's a tough sell. It's a tough sell. And it's an even tougher sell when OTC Markets does some random review like they do. And I respect them at school. They got a job to do and just throws up a little thing on our stock and says, hey, this could be a shell risk. And you know what? I get it. In the course of the history of No Borders Inc. since 1996 through today, and the different owners and the things that have happened and the court things or whatever happened in the past, I don't know how you look at any stock on the OTC and say there isn't a possibility of a shell risk in the past. I think that could apply to almost every company in the OTC. I get that. But because of that reality, depositing and unrestricting restricted common stock is really, really difficult. It's really hard. And because it can be really hard, it limits the people that are willing to accept that as payment for things or services, right? We want the most options on the table with the least amount of downside and the least amount of dilution. That's what this structure does. This structure sets us up for success, and it sets us up for being able to attack, right? Having dry powder standing by, ready to go, costing you nothing, is a brilliant business tactic, folks. It's really, really good. So I'm going to wrap this up now. I appreciate all of you. I appreciate the engagement. I appreciate the support. To the shorts and the haters, I say the same thing as always. I don't need you. I don't like you. Go away. If you want to stick around, just keep sticking. Go ahead. Even with this kind of structure, again, I want to be really clear. I think that this is a positive thing for the liquidity and for the performance of our security on the market. I believe that with the limited number of shares that are currently available, our market is potentially easy to manipulate by people who do such things. And because of that, we are somewhat at the mercy and whims of these douchebags. And I don't like that. I don't think you like that. I think we all want a fair, equitable market where we get judged on the results that we bring to the table, and then there's a reflection of value for that. I know that's what I want. And so I believe that by doing this and getting qualified by the SEC and all these other things and getting additional tranches, and not ludicrous ones, but getting additional tranches of our stock liquid on the market is a good beneficial thing for the volume in our stock, for the awareness of our security, for the awareness of our company, And it makes us less vulnerable to what I think is nefarious activity in the OTC. So I think it's a positive all the way around. Now, with that being said, I'm doing it either way. Because remember, this is my show. I'm the CEO. The buck stops here. I'm the last guy at the table. I'm responsible. My head's the one that gets lopped off. Okay. So the fact of the matter is you don't have to like this. You don't have to like anything I do. But at the end of the day, this is my show. I'm doing it my way. I'm not asking permission. I sure as hell ain't asking for forgiveness. But this is the right way. And there's a lot of reasons. And I wanted to explain that clearly and succinctly and precisely. I apologize that we didn't get ahead of that filing with this information, because that was a mistake on my part. I did not expect that we would need to. I really thought that seeing the Reg A was going to be a good thing. It's huge about our business descriptions and all the things we're working on and all of these, competitor analysis and market analysis. I mean, there's a lot of information in there. And I really thought, like, man, that thing's going to come out on Monday. And like, they're going to be like, whoa, look at all this in-depth stuff. And, not exactly what happened. So I appreciate the supporters. I appreciate all of you guys. As always, follow us on social media, NBDR CEO on Twitter, at No Borders NBDR, at No Borders Naturals, at Metadent Supplies. If you want CBD, if your friends want CBD, go to nobordersnaturals.com. Check it out. We have the finest line of CBD products on the market, bar none. If you're in the dental or medical fields and you're looking for equipment or supplies, go to metadentsupplies.com. We have a phenomenal team of people, a beautiful line of products. It's much larger this week than it was 2 weeks ago. There's another 2,500, 3,000 SKUs on there. So growing just by leaps and bounds. But please check out the businesses, talk to my customer service team, and engage with our companies, buy our products, and support us on this journey as we go through it. We're working really, really hard. To everybody out there that supports us, I thank you so much, and I appreciate it. I'm having the time of my life. It's a grand adventure. I appreciate all of y'all. So have a great day, and God bless.